Welcome back to my YouTube channel. This is Make Money with Oscar, and let's go today with Fidelity. We're gonna be talking about Roth IRA, retirement accounts, mutual funds, and all in between. I'm excited. It's 2021. It's Sunday, December, I believe, 3rd, and tomorrow, finally, the market is gonna be open this new year. A lot of things are gonna change, but wow, this video, if you watch it today, I think you're gonna be more prepared to invest in your retirement, long-term objectives. If you watch it tomorrow or this coming week or whenever, well, I hope this can help you too. Guys, the purpose of this video is simply just to give you an analysis of everything that I've learned so far on Fidelity. As you can see right now, I'm not, like I mentioned in my previous video, I'm not in my typical studio where you can see me, but I still want to deliver content for your Roth IRAs, and I'm very excited for that. So with no further ado, let's go ahead and just start by telling you that I already reached $12,000. Looking at almost, and this number is going to increase since my employer is going to it's going to deposit more money. So probably getting to the 4K. This is going to come look at $13,000 very soon. I already added, like I mentioned last video, $2,000 here, and I added my individual account, $500. So I'm gonna give a really detailed explanation as far as my strategy, and of course talk about the mutual funds that you clicked on this video. Now, let's go ahead and start with the mutual funds, because gosh, there's so many different things with this, and if you really haven't heard anything when it comes to mutual funds, it's simple. It's somebody more experienced than you, someone who is actually a professional in the field, a Fidelity's fund manager, someone who studied it and was hired to do just this, to understand the industry, to understand departments, to understand research. That person is taking care of the fund that you are buying into. And you may ask yourself, well, is this for free? Do I have to pay a fee? Or how does this work? Well, that's exactly why every single time you buy one of these funds, it gives it, the platform provides all the information to you. And we're going to be touching on that just briefly, right? Because I do it on some of my previous videos. But the purpose of this one is for you to understand that there's a full spectrum of Fidelity funds. And if you want to maximize your returns this 2021, well, my friend, you have to really understand where you belong. Do you want to be a domestic equity fund type of person, international, sector one, fixed income, an asset allocation, which this one really means you don't want to mess around with a lot of the trades and you just want to let your age determine where your money is going to go to. What I mean with that is on the asset allocation, and you get into this page, guys, when you sign up for your Fidelity, or even not being a customer, you can also check this investment products, and then you click on mutual funds. Very easy to do. Now, asset allocation. I do recommend reading all of this because it's very important. It's a lot of information, but it's basically saying that professional people manage this, and it's really based on target date, target risk. You determine how much risk you want to get involved, or when you want to retire. Correct? In my case, as I am getting close to the 30 to my 30s years of age, well, if I work for 30 more years, that will be around 2050 or 2055, retiring at around 55 to 60 years old. And so I'll be looking for some Fidelity Freedom 2055 or 2060. Or if I want to keep letting my money grow, I can decide a new Fidelity Freedom 2065 fund. Correct? So these funds get more conservative as the year continues, as the year moves beyond. Okay, so as the years come closer to today's date, they become more actually, let me just correct myself. No, as the years go further from from today they become more aggressive, and as the year comes closer to today, they become more conservative. Sorry about that. Now, that is basically the idea of the target date. Okay, and then you have your index, you have your money market, and all these different types of fidelity funds, which are really cool. Where I am right now, it's on the Fidelity Index Fund that I mentioned throughout my YouTube channel, and if you watch that, of course, and I'm a very big advocate of index on Nasdaq Composite Index. The reason why is I think it's a very good index right now, and it really represents what the technology companies are doing. Okay, so it is not the only one that you can make a lot of money from. I have collected these mutual funds for you, and there's a story behind these mutual funds. So these mutual funds that you're seeing right now, guys, are specifically and highly targeted to technology. Technology. And if you, as I mentioned before, and as I mentioned throughout my YouTube channel, I do believe that technology is going to take it from now and beyond. I know cryptocurrencies are really popping off right now and they're doing well. I mean, honestly, they're doing well. However, I mean, to me, as a, I believe, new investor that started last year, I really want to keep at least 90% of my investment portfolio on real companies that are not determined by the digital cryptocurrency. So, in order to do that, I like to spend most of my time and energy on good, reliable mutual funds like this. So, the typically, guys, I like I mentioned, I select Nasdaq Composite Index, and we're gonna be taking a look at the different information here on every single index, right? But one of the things that I always mention on the hypothetical amount invested, which is $10,000, is that, and let me show you the S&P 500, just compare it to, for you to understand, is that most of these mutual funds beat the S&P 500, okay? Which means that these funds really do better than your typical 500, the best or the largest 500 companies in the United States. And all of these mutual funds are here, are collectively in, as the category says, most of them are in technology, and this NASDAQ and OTC are also domestic. So these are from the United States, and we can see the returns and expenses. I prefer that the expenses is as low as possible and the returns are as high as possible. And you can tell from here that all of this light blue color, guys, that's Nasdaq. That's the one I typically I invest in. And let me make this easier for you to see. There you go. So now you can really tell the lines. So there are a couple of, I mean, not couple, but more mutual funds that perform typically and hypothetically based on the previous data, based on previous track records, better than Nasdaq, which is fine, right? I would just tell that I prefer Nasdaq because if in case that the technology industry takes a hit, well, what's going to happen is that you're not going to really receive that 60 to 55 to 65% hit if most of your stocks of the companies are in the technology industry. Okay, so Nasdaq, it's 46%. So let's go ahead and click so you see that. Fidelity Nasdaq, we have the top 10 holders, 46.28% of total portfolio are this. So most of these are technology companies. What happens is that if, let's say, in 2023, 2022, as you keep holding these stocks, something happens, a tech bubble, you name it, well, I have 50 plus percent that it's gonna help me balance the hit out. Whereas if we go back to this chart, the select software and IT service portfolio, which if we go to the yellow line, that's the highest one. Let me just show you guys what is the percentage that they have on these accounts. 61%. You see? So 61.66% of total portfolio are Oracle, Autodesk, Cognizant, Google, PayPal, MasterCard, Salesforce, Visa. So these are heavily tech companies involved. Of course, if you haven't noticed, 2019 and 2020 were huge years for technology companies due to the pandemic. But will that growth and rally continue? Well, that's why I typically prefer NASDAQ. But now I'm showing you these acronyms, right? So you know them. And if you really like technology companies and mutual funds for your Roth IRA, well, go ahead and give them a look. I'm just telling you right here. That's the snapshot, the overview. You can totally see, based on what Fidelity has on hand. This is how the life of the fund is performing. The risk, typically I personally want to have a medium type of risk, because remember, this is for your Roth IRA. It is an investment that you're trying to keep stable but still growing. The higher the risk, the more you can win or lose. I rather have that risk with my stocks rather than my mutual funds with my Roth IRA. Okay, so listen to that. So you can see, the risk based on Morningstar. The management fee is very easy to understand, which are right here. So typically it's like $3 per $1,000 every year, $7, close to $9, $7, $7 per $1,000 per year. So that's the expense ratio. You can go ahead and give more information right here. Let's say if we go to Fidelity NASDAQ and you want to do the more, there you go. So expenses and fees, expense ratio gross and net, $3 per $1,000 a year. Okay, so that's for you to understand. And the Fidelity, the one that I told you had more money to pay, it's $7. So it really is up to you. I mean, by the time we are hopefully retiring at 60 years of age, well, you're not going to have $1,000. You may have $1,000,000 or so. So that's when that $7 really compounds to a couple $100. Okay, hope that was clear, guys. Let me know in the comments down below if you have some more questions. Now, also, one of the things that I wanted to tell you, let me kind of go back to my account, is that there are more vehicles of investing rather than technology or index funds, right? If we go back here, you have domestic, international sectors, and sectors. That's where I found my information technology ones, if you were wondering. But I do have here online, you can find so many different great tools, the 7 best Fidelity mutual funds to buy and hold. Well, you have Fidelity Blue Chips, Zero. A lot of people are really into the Zero large cap international fund because they don't have any fees. Just because, not having any fees, to them that's very attractive. But I mean, I do value growth. Let's go ahead and research this one. You can always do it here. So I'm going to take out my, I'll say the OTC one, and I'm going to add this one. And this is the Zero large cap, and it's right here. Now, it is a hypothetical, right? But it does give you an idea, so you compare with the other ones that are just maximizing profits due to technology companies. And I think one of the things that I also look into is the manager tenure. The one I'm investing in has 17 years, and I do like that a lot. The more years, the better. You can check that the yellow one, there's 0 years, so they're either new or so, they're changing. And I rather prefer someone who is more experienced, and my money is gonna be, kept more secure. That's what I can tell you guys. So they're way more different for all types of characteristics and demands. Some people want to do the total market index fund. Total market index fund on Fidelity encompasses all, everything, all the US market. So if we go here, let's take out this one, and let's go ahead and add this one. And that's the, let me find it because I lost it. Okay, it's the green one, so it's right here, right next to the S&P 500. You see? So it's just a way of looking at it. Of course, please go ahead, click, and do all your research. And last thing that I wanted to tell you guys is the ARK Invest. This is a ETF that it's been very popular right now, and I'm gonna look into specifically for my individual account. ETFs I can buy with my individual account, so I think I'm gonna look at it. So if I go to ARK, let's go ahead and find it with another K. Here it is, ARK Innovation ETFs. You see? So on Fidelity you can find this ETF and see that it's doing well. I will do my research on this one and let you know, but one thing that I was very sure is that they're heavily more than 10% on Tesla, Roku, and Nvidia as well. So, or NVTA, companies that had a great run 2020 due to, of course, different things. But that is, one of the ETFs that I have heard from many investors on this platform, YouTube, and friends of mine, that they're just liking it. And I'm really gonna take a look at it, specifically on ARK Innovation and ARK Financial. Where is it? I believe it's not here. But this is the one that a lot of people are buying into. So you have more options, guys. They're focused on disruptive innovation, and 2020 was the year of disruptive innovation. So I hope that for these upcoming years we will have more places and more options to do that. All right, everyone. So this is exactly what I wanted to tell you. I wanted to tell you and mention about my portfolio, my different things, how things are gonna move on for this upcoming 2021. So if you're new in this platform and you wanna, really expand your doors to more opportunities on the platform, on either Robinhood or Fidelity, your Roth IRA, well, go ahead and start doing your moves. Remember, guys, that you have $6,000 to invest for the year. Some of the contributions after that are not possible until the next year. I do have $4,000 left. I'm either gonna buy more NASDAQ, or I will say probably some technology mutual funds on that sector. All right, so you're aware, and I'll let you know as we continue. Tomorrow the market opens. I'm very excited, and we'll see what happens. Guys, if you enjoyed this content, go ahead, like and subscribe. Let me know in the comments down below. And remember, if you want to make money today, click the link down below on Webull or Robinhood, and you can make money today with some free shares. You guys take care and peace. Have a good one, guys. Thank you.